Good afternoon, everybody. It is Sunday, June 16th, and happy Father's Day to all the dads out there. We're going to dive into our CoT report here from the data that came out Friday the 14th. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. We'll kick it off with the SPX here, and the biggest note is that commercials are neutral, but they've flipped to the positive side. So we'll have to watch that as that gives us no clear indications yet, but it is something to note that they went 2,000 positive from a recent short position. A quick review of last week's levels. We held our mid-rotational zone on Wednesday. So Monday and Tuesday, it was resistance and good shorting there. On Wednesday, when we got over, we hit our upper target within about 1.5 points. So almost nailed it to the tick on that FOMC and CPI day. The outside participant here is the small speculators, which are at a 1-year maximum and pose a risk for about a 1 to 2 day drop to shake out those traders, as that is now getting extended on all our durations. For the week ahead, the contract has been rolled over here. 55.19 3/4 is this upper blue. That is now our new rotational high, with 54.55 as our pivot and 54.13 rounding out the bottom of that lower rotational zone. Above 55.19, and we'll target 55.63 with a max expected upside of 56.01. Under 54.13, our targets are going to be 53.50 to the very downside. And then 52.40 is the lowest level that we have. The market is closed on Wednesday, so prepare accordingly for that. Just want to give you guys that reminder. Bitcoin, yet again, no strong signals here, but we do see commercials are building a long position, which we will look for an upside move and likely a move over the all-time high to end up liquidating that position. But we're only scoring a 76 on our positions rating as opposed to getting over 90 or 100. So we'll have to wait for that. So stay tuned for the next couple of weeks to see if we get our signal. On to commodities here. We'll look at gold. Commercials are covering their short position. So they went max short, almost setting a 3-year max position. We stopped about 70,000 contracts short back about a month ago. And since then, they've been covering into the 100-point drop on gold, and now they've covered about 20% of their position. Just a reminder that these positions do last for a significant amount of time, and they take months and sometimes quarters to unwind. So while the edge has faded in gold, we'll wait for a signal to develop again. And for those that do watch commodities, remember to check the GSCI as it has broken trend in May, and we'll watch that if we are looking at any commodities as well to see the overall positioning. And onto the currencies, the 6C is still our strongest setup, and it's the same setup as last week. It's actually a little bit stronger, as you can see the outsized positioning move here into where commercials got extremely long and set a new position. We saw the exact same thing happen here back in April before the market had a significant bounce. And so if we look at our levels from last week, which are going to be the same as this week, when we held our lower rotational at spot 72905, that was our line that we need to hold for longs. It worked out very well on Wednesday, right up to our pivot. And you can see it's been a major level as we went through the rest of the week. For the week ahead, so we'll use 72905 as our line that needs to hold in order to take any longs, with targets at 73240, spot 73440, and at the very upper at spot 73770. If this does break that spot 72905, just remember we don't want to be catching that falling knife, and we will sit on the sidelines while we wait. So thanks, everybody. I hope all the dads out there are having a great Father's Day. If you have any questions, you can check us out on Twitter. You can check out our website or our YouTube channel. It's Sticks Trading Academy at stickstrading.com and on X at Sticks Academy. Have a happy Father's Day.